May profits be upon you. Welcome to another weekly market forecast. We're looking at gold. Gold in them there hills. All right. We're on the monthly time frame. All right. And what you can see is what is obvious. Higher high, higher low, higher high, higher low, higher high. That's it. All right. We're breaking structure to the upside. And we are in this long wave here. All right. I said wave because it looks like a wave three to me. All right. With one, two, three. All right. Um, just I'm not a wave Elliott wave guy. It's just that I've seen it a number of times, and this looks like a wave three. And doesn't mean it, which means it doesn't have to end. But I'm looking at it through the eyes of ICT concepts, smart money concepts. All right. And what I'm looking for is impulses. This is an impulsive move. All right. When we hesitate, we're looking at accumulation. All right. The generation of liquidity. All right. We can see hesitation here. We can see hesitation here. All right. This accumulated period lasted quite a while. Look at this one. All right. Price moves down. We move sideways, and then we finally get a breakout to the upside. I mean, you just have to be patient through these periods. I don't think we're going to be entering in one of those kind of periods. Just looking at the fundamentals, when there's times of crisis, times of tension, that's when you'll see gold move. Right now, I want to bring your attention real quick, to the COT report. And if I can just get that to open, that'd be great. All right. All right. What we can see is on last month's COT report, which was dated the 29th. All right. The results are in on Tuesday, but they're not reported until Friday, which just passed. All right. And it says that 30,000 contracts were taken off. All right. They just took profit. That's all. All right. It was the end of the month. That's when books get balanced. All right. And they took profit. But look how many are long. Look how many are short. All right. Look how many of the big boys are in this. All right. Speculators are majority, 63% long. They took 30,000 off, took 1,000 off the shorts. But if you look at this number, in prior months, you'll see, prior weeks, you'll see that number was a plus 41. What was it the week before? It was a plus 8. You understand what I'm saying? They were building up. They took some profit, and you saw price pull back. Let's go to the weekly time frame. Here's the latest accumulation. All right. Here's the latest consolidation. If we want to kind of illustrate it, let's go here. All right. The range is from let's call it here at the top, and let's call right around here, around the bottom, right about there. Okay. All right. This is 1, 2, 3, 4, 5, 6, 7, 8. That's 2 months of data right here. All right. Moving sideways within this. Don't get caught up in these candles. This shooting star and what is this? A hanging man. All right. They're opposing trend changing indicators. All right. Usually you see them at the top or bottom of a rally or a drop. And they're opposing. Together, you put these together, you have a big old doji candle like this one. All right, that doesn't give you any clue as to which way it's going to go. That's what this is. All right, don't get caught up in candlestick reading and stuff. Okay, so what we're waiting for is the range. Price is moving from the bottom range towards the top right now. I think I think we can lean towards buys. You understand? Because all we're doing is going from the top of the range to the bottom of the range, top of the range to the bottom of the range. The next stop should be the top, right? They're just using some common sense. I don't know. All right. In either case, we're on the daily. On the daily, this is where where the money's made, in my opinion. Where with analysis anyway. I want to see this move over just a little bit, and you too. All right. So we're at or near the bottom, right? You can see the engagement at these levels here, right? And this, if we concentrate on the latest data that has been printed, there is no fair value gap here, all right? But what we do have is a change in the state of delivery. Look at this. Price is in a downtrend. Kind of impulsively, wouldn't you say? All right. And then we had, what was that? What was that news? Yeah, the FOMC. All right. FOMC made, weakened, let's see, let me make sure I get this right. It strengthened the US dollar against its counterparts. But then 2 days later, we get the NFP weak numbers for the in terms of the economy, and it weakened the U.S. dollar, allowing its counterparts to outperform it. And we've seen this big surge on Friday. All right. What I want you to notice is that this was a CISD, a change in the state of delivery. We were once bearish, and now we have a break of market structure to the upside here. This is a signal that we should be looking for buys. Now, understand, this is on the daily time frame. I'm looking for a candle to possibly come back and test these highs, test this the shift in the market, which actually is here, right? I would draw it there as a market shift. Hello. All right. And with that strong close above it with hardly any wick, all right, there's no pullback yet. So I'm looking for that pullback to happen with the next couple of candles. You understand? So what I expect to see is a wick down Monday or Tuesday, price coming a wick down, and then a pullback up. And I'm looking for a fair value gap. This is the low of it. I'm looking for a fair value gap to develop. Maybe Monday gives that small candle because there's not a lot of news happening on Monday. All right, let me clear it up a little bit. All right, I'm looking for this fair value gap. It's not here yet. All right, it's not here yet because we don't have a third candle close here. I'm looking for that wick to form, this to be a Monday candle, and then Tuesday we tap in, Wednesday, and then we can continue higher. All right, look at what the market did. Here is a bearish fair value gap here. You understand? That was a bearish fair value gap, and price just ran through it and closed above it. All right, that's a strong indication of bullishness. So this makes sense to me. Got it? I'm not interested in taking any sells in this market until we get past this high. This high here. If we break whatever fair value gap might develop here, hey, look, Monday's candle could come all the way down and do that. This is where you're safe to take shorts after when price, just eclipses this low and closes past it. But I don't foresee that happening. There's a lot of momentum here. All right, and it's very impulsive, a little bit more impulsive than this move. All right, this is a very impulsive move. Looks like we may carry all the way up to to these highs at the very least. Okay. Yeah, there's some headwinds ahead, like this bearish fair value gap. There's another one here. And then we have this area of supply here. All right. I'm looking for price to react to that and then continue higher. But it may turn around there. We don't know. But up until that point, this week, I think if we wait for buys, if we're patient enough to wait for buys, yes, you can scalp all the way down here if you want to. But if we're patient enough to wait for the better opportunity, the more high probability opportunity, I think it lies right there. Is there any clues of this on the 4 hour? Let me click. Sorry, let me clear this up. I think I missed it. all of that, and I missed it. Okay. All right. Yeah, there is. First of all, the CISD is very clear. The shift in the market is very clear. From bearish to bullish, we should be looking for buys. On the 4 hour, we have a bullish fair value gap here already. It's rather large. So when I see these large ones, you just got to think if we come back to it, I'm looking for the confluences like the intersecting high here. I'm looking for price to turn around right in there. Yeah. All right. Now, you want to also bear in mind Fibonacci retracements. All right. Here, if this is the low of this impulse and this is the high, what we want to see, what we want to look, hey man, where would the price pull back to and find support? You want to think in terms of 50%. All right. And it doesn't have to come all the way back to the 50%, but look where that 50% is, right at the CISD. If price makes it down here, this is going to be a high probability trade to the upside, in my opinion. All right. If it goes down to the 618 Fibonacci golden ratio, all right, the golden ratio, there is another area here. These highs that intersect that area. Look at it. So this is, being patient is going to pay. You can take sells if you're a scalper all the way down. Sure, you can. I'm not doing it. All right. I think I'd rather wait. All right. There's a couple of confluences here at right around the 50%. I would love to see price make it down here and into that. Now, if price gives me a break of market structure, if price gives a market structure shift as soon as it taps into the fair value gap area. If it comes down, makes a lower low, lower high, lower low, then a higher high, hey, I'm taking this. I'm going to wait until it comes here, buy it up, and that'll be it. This is the signature of price that says, hey, we're shifting from one direction to the other direction. That's it. But I'm looking for a ERL to IRL move. What is that? ERL to IRL. That's external range liquidity, which is a high, which is highs, where there's liquidity there, here. All right, price takes out that liquidity externally, and then it returns to an internal range liquidity, which is a fair value gap. All right, it can act, an order block can act as a internal range liquidity as well. But I primarily look for fair value gaps. All right. From that internal range liquidity, we go back to external range liquidity. And that is the process. Higher high, higher low, higher high, higher low. Go from external range liquidity, boop, to internal range liquidity. Boop. Then external range liquidity. If the market isn't offering fair value, it's looking for liquidity. That's it. Got it? I hope you enjoyed this video. Make sure you hit the boost button. Make sure you hit the like button. Right? Leave a comment. I respond to all my people who put in comments. I respond to all my subscribers and my viewers. And I will see you in the next video. Thank you for watching this one. Hey, the next one I'm going to do is going to be the S&P and the followed by the NASDAQ. All right, I'll see you in the next one.